Good morning. Welcome to the Recovery Report Live. My name is Matthew Sengsourinh, Senior Vice President of GlobalPro. GlobalPro is your insurance coverage expert before, during, and after any loss or damage. We just passed our 11.5-year mark. We represented over 1,400 community associations, hundreds of business owners, thousands of homeowners and private clients, and we've successfully recovered over $1.1 billion over the last 11.5 years. Today, I'm filling in for our host, Daniel Biodest. We have a great show packed and a lot of information today, and I want to get right to it. And first and foremost, I want to discuss an article that I just read and just came out a couple of days ago that I think is pretty impactful for what's going on behind the scenes in the property insurance world and the market here, specifically in Florida. So the article is very thought-provoking, and in full disclosure, it's one-sided. But much of what the article discusses and much of what the reinsurance executives in the article discuss is pretty on point with what's going on now with the dynamic landscape of the markets. I think what's also telling is what they don't discuss. So we'll get into that here in a second. I broke it down into 3 areas. Let's call them checkpoints, if you will. And the first checkpoint is what we would call, the era of the sustainable rate adequacy, right? Sustainable rate adequacy. That's code word for something else, and I'll get into that right now just to discuss it a little bit further. So the notion of rate adequacy in the reinsurance realm is discussed here in the article by Kevin O'Donnell, CEO of Renaissance RE Holdings, and Brian Young, CEO of the Odyssey Group Holdings, and it sheds light on this phenomenon. What is interesting here is that they're calling it a phenomenon. They imply that it's new, right? It's recent. But what they're talking about here is, the risk exposure and the way that insurance companies, and in this case reinsurance companies, manage their balance sheet, right? It's not about sporadic rate hikes and things like that. They're trying to balance out the market. They're trying to move towards sustainable and more balanced rates, is how they describe it. And they emphasize that the surge that we've seen over the past 2-3 years, called from the pandemic forward, with all the activity in the hurricanes that occurred here in Florida, specifically last year, has caused a fundamental shift, is how they describe it. Again, it doesn't make any sense because this is insurance company management 101, balance sheet management 101. So the way they kind of wrap all that up is they talk about this fundamental shift being a response to capital providers' demand for substantial returns. I've talked about that extensively. Many of you know me who are watching here, certainly Dan, certainly Rob, everyone at the office, they hear me talk about all the time. My former life, I grew up on Wall Street in my career, and early in my career, I worked with a lot of institutional accounts or clients where I was there to raise money from those clients for our managers at my former company. Oftentimes I was talking to insurance companies as well, and I understand fundamentally how they run their balance sheet, how they run the business, what a profit and loss looks like for them. And it boils down to really a couple things, right? They're going to describe it as moving towards rate adequacy, right? And to balance out their market and to balance out their risk and things of that nature. What that means is, and what I describe all the time, is they're beholden to shareholders, right? A lot of these companies at the parent company level are public companies. They're publicly traded mutual insurance companies. And what happens is they have to report quarterly earnings. And on a quarterly basis, they have to show that there is growth, incremental or huge, whatever it is. For decades, the insurance industry and their shareholders were used to double-digit type returns. That's floated down a lot, especially over the past decade, I will call it, over the past 10 to 15 years, more specifically, as costs for labor, costs for materials, things like that nature have grown. In the past 2 years, we've seen unprecedented levels of inflation, again, not seen for 40, 42, 43, 44 years, which has driven a lot of this. They're not going to explain that in most of the articles and most of the discussions that you might see, in a mainstream media basis, because that's not what the lobbyists and the insurance companies want to talk about. But to the credit of these 2 executives, that's one of the things they mention, right? It's not only the evolving risk landscape, but also inflation. I think that's extremely important. To kind of give you an idea of how things work, an insurance company, puts together a contract policy. Whether they're admitted or not is a different discussion. We'll have another time. But those contract policies typically have ISO forms. The policy is provided to the insured or the person looking for insurance. And it's a contract of adhesion, it's called, right? It's a unilateral contract, right? You can't ask to change the language in the ISO forms. And you can't ask for certain parts of the policy to reflect different language to your benefit as a policy holder. You either accept the policy or not. Now, there are manuscript forms. There are manuscript policies that are totally different in nature and discussion. But for the most part, let's focus on what's actively out there, what's pretty much universal, and the ISO forms that are most often in these policies. When an insurer says they want to mitigate risk, they're talking about the number of policies in a certain area with a certain exposure to certain types of perils. Okay, so what you find is you have an insurance company who provides these policies. They know how many they've provided. They know the language in them. They can model out their risk models. The actuaries do a good job of doing that, and then they go out to market and they accept premiums from insureds. That premium then is taken, and the actuaries do the other side of their job, and they allocate that money to what's called LDI, liability-driven investing. Right? They're buying zero coupon bonds. They're buying high yield. They're buying all securities that would give a spread or give interest back for owning that security, for lending out that money, basically, right? And so what happens there is it really bifurcates the way the insurance companies look at their balance sheet. The only way that they make money is to continue to grow the premiums. Growing premiums, right, increases risk because they're spreading their risk out over various states and countries in some instances. On the reinsurance level, it's other insurance companies and their risk, and they have to back that into a certain type of return that they want to achieve, right? So I think what gets lost in the shuffle, what gets lost in all of the discussions are really three things. One, right? It's always about the balance sheet. No matter what they tell you, the decisions they're making are always about the balance sheet. When they tell you they've suffered huge losses from a hurricane and they have to leave a market or they have to increase premiums, it's in response to a balance sheet issue, a math issue, and they're trying to earn and achieve a certain type of return so they can set the expectations for their shareholders, right? That is who they are beholden to, right? So to kind of prove that point a little further, this article talks about the tough market and how the reinsurance market has been kind of a driver here of some of the insurers leaving the market in Florida specifically because the reinsurance rates are so high or so expensive. So I went and got the quarterly earnings here, and I have a list here of some of the top 20, we'll call it. And I want to read down the list a little bit, and you tell me what you think about these headlines. Here's a good one. Global Indemnity posts net income in quarter 2, 2023 versus a year ago. It says that the shareholders have been notified that they reported a net income of $9.2 million for the second quarter of 2023. Right? BR Group posts 22% organic growth in quarter 2. Okay? Grew its revenue by over 28%, $297.2 million in quarter 2. QBE, the famous QBE, everybody knows QBE. QBE's first half of 2023 net profit soars. That's the headline, soars to $400 million. Let's see. Let me go down to one that's a little bit negative here. Maiden Holdings sees $2.9 million net loss in quarter 2, 2023. Let's take a look at what that actually means. I actually looked up the quarterly earnings and I went through here. Okay, so what they're talking about here is this quarter for Maiden Holdings Limited, this quarter's underwriting loss includes adverse prior year development of $4.5 million from AmTrust contracts and diversified runoff contracts. Quarter 2, 2022 only had adverse prior year development of $1 million. Interesting. If you start to read the fine print, you start to understand some of these numbers here. Net premiums written in quarter 2, 2023 were $6.9 million compared to $3.2 million reported in the same period last year. Net premiums earned $11.03 million compared to $10.4 million in quarter 2, 2022. While net investment income for the quarter also improved to $10.5 million from $7.6 the year prior, literally 50% higher. Okay, So when you look at the entire picture and not just the headline, Maiden Holdings sees $2.9 million net loss in quarter 2 2023 reinsurance news. When you look at the fine print and you start going through the balance sheet, the profit and loss, the quarterly earnings statements, kind of paints a different picture here a little bit, right? And of course, at the end of the day, it's always about the balance sheet. It's always about the balance sheet, okay? Let's move on to our second point here. I think this is also kind of a product of what we just discussed and described here. But there's a psychology of the market that also comes into play. That's not talked about very often because it's a little hard to describe, a little hard to discuss unless you understand how the industry works and the behavior of the insurance companies, the reinsurers, and everybody in the process. So what these two executives talk about is they take a deep dive into the market psychology and the influence on the behavior of, in this instance, reinsurers. They describe the past couple of years as a challenging underwriting environment, right? And the results from that challenging underwriting environment caused or produced this new mindset all of a sudden. And insurers and reinsurers are more cautious. They're more disciplined, right? All of a sudden, more cautious and more disciplined all of a sudden. And this approach, this combined approach of being more cautious and more disciplined, right, has led to higher retentions. They've refined coverage structures, and they're seeking more accurate pricing. Okay, and so what that boils down to, what that means basically is, what we see in the market today is we have insurers and policies that really want to give a limited liability, right, a sublimit for every possible peril, every possible loss and or damage, and that's what they mean by more accurate pricing, right? That's what they mean by refining coverage structures and things like that. It's sometimes in a circular argument, right? And if you don't understand the policy language and how things work, how things supersede other things, meaning like you might have an exclusion for something that gets put back in and as an additional coverage. There might be some anti-concurrent cause language. There's all these factors and variables, and we always say at GlobalPro, right, the words in the policy, and anything really, the words, right, get the meaning from the words around them. So loss and damage, right? If there's an or somewhere in a sentence for a policy provision, that could change the entire discussion. There's all these things that get factored in that you have to understand, and you can only understand typically from experience and going through this and having these discussions and understanding the adjustment process and recovering money for very sophisticated clients with very sophisticated claims of loss and damage. They further go on to talk about that this new psychological approach, whatever you want to call it, highlights a broader perspective on their risk management, right, which I mentioned before. They talk about going beyond price and they want to talk about coverage quality and risk exposure. And again, I call BS here. That's a fancy way of describing, going back to what they talked about before, right? Describing their real approach, which is more cautious, more disciplined. All of a sudden, again, more cautious, more disciplined, right? But they're covering less, and they're charging more. So price discovery, in my opinion, is what they're talking about, and they're discovering that they can charge more. So as I mentioned before, it's all about the balance sheet, right? It's all about the business decision. Okay, so when you have the chance to increase prices, again, last week we talked about shrinkflation, right? So they're shrinking coverages and charging more for those coverages, and that's what they mean by that. That's what those code words, literally mean that. So they're reducing coverage and charging premiums, that are soaring 20, 30, 40, 50% on average over an annual, period. That brings us kind of our third point, which the legislative environment, as we've discussed several times, has been pretty preferable to insurers, unfortunately. Their lobbying dollars are going pretty far. Unfortunately, in the state of Florida, they've gone pretty far. The pendulum has swung, in our opinion, way too far to one side. If you look back, just even in the last 20 months, we'll call it, right? We had the legislative session in 2022. We had the special session at the end of 2022. We had this year's legislative session. Things hopefully have changed for the better with the introduction now and the passing of and the implementation of SB 7052, like we discussed 2 weeks or 3 weeks ago. But for a long time, in the last 18, 20 months, we'll call it, these insurers were really getting favorable amendments to the statutes here in the state of Florida, and it reflects in everything that's going on. They're paying less, they're charging more, and they're covering less. It's a byproduct of many of the things that we've discussed on previous shows. And what's interesting here, I mentioned before, what the things that these executives in the article don't say are pretty telling, and the things that they do say actually are pretty on point. They're telling the truth in many instances. But Brian Young here, mentions that while reforms are expected to leave a positive impact, they truly do think that they've gotten the leverage here. He still says their full effects might take some time to manifest. We know that nothing really changed at the beginning of this year, especially after the roller coaster of last year's legislative session and special session at the end of the year. And he's saying that it will take some time, and it will. These reforms aim to create a more stable and balanced insurance market, especially in the face of catastrophe losses and other challenges. Again, I don't agree. Where if premiums are rising at the rate that they're rising, and the coverages, the sublimits, are decreasing, and we can go back and chart, how much they're decreasing by and things of that nature. We can see it, and these quarterly earnings reports continue to grow, continue to show, that the balance sheets and the profit and loss are in the black. Again, to me, that's unbalanced at the end of the day. So it's unbalanced. So, one of the reasons I think that's interesting in the article that they also talk about is, Mr. O'Donnell from Reinsurance Re. He talks about the growth of Citizens in Florida, the state insurer of last resort. He says that that's played a significant role in balancing the market. Again, I don't. He doesn't really give much info about the basis for that statement, but he does talk about the risk transfer, right? Which of course, if you look back over the past couple of years, Citizens now has well over 1 million policies in the state of Florida, well over 1 million policies, and they continue to grow. But ultimately, knowing the structure of Citizens and how an insured in the state of Florida can get a Citizens policy and what has to occur for that to happen. Again, his statement doesn't make any sense, right? It have to be cheaper, has to be the same coverage. There's a certain hurdle rate there that they have to be able to beat, for Citizens to be able to be an option for insureds, especially for associations. So he's describing it as a risk transfer to Citizens, but what they're basically doing is not renewing policies, giving less coverage, charging more premium, which would, again, produce a situation where insureds can have no choice but to go to Citizens, and they're just dumping the risk on the state of Florida, which all the taxpayers pay for. So again, I think it's disingenuous a little bit here, but again, he's telling you the truth, right? You got to read between the lines, I think this article does a good job of kind of balancing that message. All right, so wrapping all that up, there you have it. Kind of 3 pivotal points of the article. You should go check it out. We're going to put it in the caption below, the link to the article. If you want to go to our website as well, go to the Griffin blog. We'll have a blog post there where we talk about it a little further, and then we'll have the link, of course, for the actual source. I implore you, you should definitely check it out. As we navigate the intricate world of insurance, it's really crucial that associations, insureds, policyholders in general, that they remain informed and adaptable. And that's what this show is for. The Recovery Report Live aims to do that. The insurance coverage expert at GlobalPro, we strive to be students of the game, right? We want to fulfill our mission. And to fulfill our mission means we are protecting policyholders by disrupting the insurance industry. And you can only do that when you have a strong grasp of the dynamic, industry landscape. You have a strong process, you have a strong pedigree, and of course you're constantly reviewing, discussing, and debating policy coverages, policy language, and things of that nature, and the guiding statutes. Of course, all these amendment changes we discussed, legislation. You have to be on top of that. It's imperative, and that's what we provide at GlobalPro. Okay, and I want to make sure that that we talk about that a little bit more, because we are more than just public adjusters, right? You're getting the whole team. You're getting the pedigree of our team. You're getting the experience that we have here and the approach that we take when we represent clients, and more specifically associations, business owners, and private clients and homeowners. Okay, so read the article, check it out below. If you're not subscribed to our YouTube channel, please subscribe, because we try to give this to you guys on a weekly basis. and make sure you're following us on Instagram and Facebook and all the other platforms that we're very active on, especially LinkedIn as well. Switching gears just a little bit here before we sign off. I can't do a show without talking about upcoming drops. I think one of the things I'm still excited and I'm flabbergasted how it happened. But I hit on Sneakers app last week somehow. It probably means I'm never going to get another pair of sneakers on Sneakers app for the next 4 or 5 years. But I hit on Sneakers app. I hope you did too. I hit on the black toe lows. It's my first Air Jordan 1 low. I don't have another pair. I just shot my shot, and for some unknown reason, I got it. I made it happen. So I think I want to spread that luck and pass it out there. I think keep trying. I think some point somebody that is watching or someone that I know will hit on Sneakers app. I did, so it's got to be passed on to somebody else at this point. Couple of drops coming up. I mentioned you got to be prepped for. So today, August 9th, is a big day. Aimé Leon Dore, one of my favorite brands, releases they have a newbie drop today. It's 2 colorways of the 550. Their fall stuff is coming out. Everybody's fall stuff is coming out, even though it's 150 degrees here in Florida and very, very hot still. It's very, very summer. Still very much the summer here. But New York, New Jersey, especially at the shore, in the Hamptons, it's almost local summer. We have a couple more weeks and it'll be local summer, so I think that's what everybody's getting ready for. But yeah, today, Aimé Leon Dore, the newbies, the 550s drop today. Colorway is more fall-ish, orangey, brownish, natural. You definitely don't want to miss those. Tomorrow, the Air Max 1s come out. One of my favorite colorways is that deep royal blue suede around the toe box and the quarters, and it's got a black check with a white base. One of my favorites. Can't miss those. The Lakers Nike Huarache High, right? The infamous Nike Huarache High, the Fab Five made famous in Michigan. There is a Lakers version coming out, black base with the Lakers gold and purple. Definitely don't want to miss those. And I gotta, for the hype beasts out there, I gotta just leave you with one other thing. I'm not into it. Maybe I should get a pair anyway, just to hold on, just to display in the house. But there is a collabo coming out. It's the Crocs and Mischief red boot yellow drop. It's a mouthful. I said it. The Crocs and Mischief big red boot yellow drop. So you definitely don't want to miss those. I think people that for the most part, the pictures I've seen of people wearing them, they look pretty ridiculous, but they're kind of cool, I guess, at the same time. But for hype beasts, definitely something to seek and pursue and try to get your hands and cop. All right. Good luck with all that. Please let us know if there's anything we can do here at GlobalPro to help you guys out. I want to thank you for joining us again today. If your association, your business, or your home suffers loss or damage, as always, call us first. Call us first. The bug is right there in the corner, 855-487-7475. I mentioned before, don't forget to subscribe, follow us, like our posts and videos, check out the Griffin blog, the Storm Center. We're having an active season. I want you guys to be up to date and informed, as quickly as possible. And I can't leave the show and end the show without saying that our heartfelt prayers and thoughts are with the people in Hawaii, in Lahaina, Maui. I mean, it is utter devastation over there. It's absolutely terrible what we're seeing, and I hope help is on the way for sure. But I hope people are doing okay, and I hope they get what they need in the next coming couple of days here. But there is a lot of devastation over there, and we're hoping and praying that everything is okay for the most part, and that the fires are contained and done. With that being said, don't miss next week, right here live from the Nucleus Studio, GlobalPro. Same time, same GlobalPro channel, 11 a.m. every Thursday. Matt Sengsourinh, Senior Vice President, GlobalPro, signing off.